Greetings and happy holidays to everybody.
Happy holidays to
you. We're here today to talk about oil market, the year that's finishing, and what's the outlook for 2024, and the factors that will affect the oil market as far as the supply and demand is concerned. And basically, the oil market is the supply and demand, but so many things can affect the demand and so many things can affect the supply. And the closing of the oil market on December 22nd was at $73.49, WTI we're talking about. And this goes in against the grain of what happened in the markets. You know, the dollar was weak, everything else was high, with the exception of oil market. So that's the dynamics that's playing out in the oil market regarding the supply and demand. There's excess supply and not that much demand. And the outlook for 2024 is this trend to continue as far as demand for oil being lower than it has been. So many things can affect the supply side regarding geopolitical risks, political risks, internal political risk. Mainly we're talking about the US elections and other elections coming up. There's going to be 4 billion people voting in 2024 in all the elections. 2024 is going to be a really historical year. You have the elections in January, starting with Bangladesh, going all the way to Indonesia, India, Pakistan, Russia, and the main one, the United States, and even European Union has its own elections for their union, the Eurozone. And you also have the UK elections. It's supposed to be 13 months from this month, so it might be sooner, it might be, and the maximum will be January of 2025. So all these gonna matter as far as the political scenery of the world, which is gonna affect the oil market.
I like the fact that you mentioned the price of oil not being high enough in comparison to what's happening to the dollar. And I would like to know why you think that is happening. I know that there has been like some outsider factors like geopolitical tensions that has been, you know, pressuring the price of oil down, at least because they were not expanding, you know, like the day before yesterday, or like on Thursday, on Wednesday, the whole market was talking about all this, you know, the attacks that are happening to the ships in the Red Sea, but they were muted, right? So there's still talks about Houthis saying that we will like try to reach our goal and we will do anything that is within our power. And there's like the, you know, the from the US, we're having ships being sent, you know, just to make sure everything is moving smoothly, but they were muted, right? So like that was not a factor to move the prices high again. Where do you think that the oil prices should be in comparison to dollar?
If the demand is not there, then the price shouldn't be much higher than this. But because of the dollar weakening, the hiking cycle in the United States is over. Now they're talking about the rate cuts coming in 2024.
Right.
So, but the demand for oil has to be there for it to move higher. With the OPEC output cut, it didn't do much to raise the prices. And now you had the wars, especially the Middle East war, starting, and that really didn't do much. So that's shown that there's other factors playing in there.
Yes.
And in my opinion, one of the factors that's there is the U.S. politics right now, as far as releasing oil reserves like they did in 2022, and continuing to do that when needed, as well as the maximum output for United States with the shale system, and I think over 20 million barrels a day they have supply
Actually,
they can
13.3 million.
yeah.
At this point, I think last week it was announced, but I can think of some other factors, as you mentioned, just to complete your points. The first thing is that for the past 44 years, October, November, and December are the months that the price of oil do not perform as well as other people think that they would. Another thing is that the outlook for the global demand right now is very negative, and mainly because of China, because we think that because of the property issues and the deflation issues, the demand from China, which is the second biggest consumer of oil, is weakening and it's not as strong as many years before. The third point is the amount of the US production, much more than any other country. When we think about oil, first we think about OPEC and we think about Saudi Arabia. But right now, the US is the biggest oil producer, 13.3 million barrels a day. Now, Russia is like 9.5 million barrels a day. Saudi Arabia is about 9 million a day. So that gives the US a bigger role. There's excess in the market. We see the supply cuts from Saudi Arabia, from Russia, from some other OPEC plus countries, but because of the amount of oil that is being supplied from the US, still the supply and demand do not match. That's why we see the price of oil not rising despite the cuts.
It's funny you say that, because in the outlook, the demand outlook that was published from OPEC last Sunday, they were hopeful. They were very positive on the outlook of demand, with 2.2 million barrels a day in the coming quarter of 2024. And if you look at the same report from IEA, it points to 1.1 million barrels a day of demand, which has been revised to the upside with 130,000 barrels per day, and which is actually normal, because we have always been seeing the IEA being more conservative and more bearish on the demand. But once you look at what OPEC is doing, because let's be honest, we're on a bigger scale, we're still coming out of a recovery from a crisis, right? And
from the pandemic crisis.
Yes, and I think that, like what do you call it? It's the underlying trend is still bullish, but we as the world have not been satisfied with the speed of this recovery. And to be fair, on China's side, we have been seeing good retail and industrial data coming out of China, but just because it's not back up to the levels that it should be, let's say if the pandemic did not happen, it's being taken for granted. And we have huge amount of stimulus is coming from the government. And I think the real estate, as you mentioned, it's overpowering all of this, but it exists. Yes. So I'm not very bearish on the demand outlook that it's gonna be in 2024. What I really think is that it's gonna drive the prices of oil in 2024 is the monetary side that is coming from USA leading. The USA is leading it, and it's gonna, eventually spread to all of the other central banks. I've actually found this study which was talking about the average oil prices during the cycles of tightening and easing. It started from 1981 until 2011. So it compared this this period of time. So in 1981, the average price of each barrel was $35, and this was while the tightening was being applied. And in 2011, the prices got to 111 per barrel. While the interest rates were high, and if you want to check out the site that they brought the rates down, you could see a 16.7% versus 0.1% difference. So this monetary change of prices, I think I'm gonna repeat this because it's actually a very important point of mine, and I just I had to go over it again. So we're comparing the period of time of 1981 to 2011.
1981 was the year of the Iranian Revolution, right?
Yeah.
Is it? I haven't been counting.
I think it was that time. And
So the average prices in 1981 was $35 a barrel, and then the average in 2011 was $111 per barrel. And if you want to if you want to put them in place of the monetary ratings, at the time that it was $35 per barrel, we were having 60.7% of rate hikes on average. And in the $111 per barrel, we had 0.1 in terms of monetary rates. So
they were easing, you mean?
Yes, it shows the higher the rates go, the lower the price of oil gets, and vice versa. So if we're seeing the cycle of quantitative easing, if we may, from the central bank start, we could actually expect a higher demand from the countries. And with the dollar, decreasing in value, we can also see more foreign countries being the buyers, because they do not hold dollars, and it's cheaper for them,
yeah,
to consume this oil.
That actually is a very logical explanation, but in my opinion, in the past, the role of OPEC Plus was much different than it is now. The structure of oil production has changed a lot. So as I've mentioned, the US has become a much more prominent player here. And with the point that you've made, I do not think that the policy rates, I mean the Fed funds rate or other official bank rates are gonna go as low as what you've mentioned. The average was like 0 point something. Yeah. I do not think the danger of inflation coming up is gonna let the central banks to decrease their rates that low. And if they are decreasing the rates, there has to be something big like the pandemic, because it somehow disables the economy.
They need to bump the economy up.
Exactly, because as you've mentioned, the next year is the election year. So they have to control the inflation, and they have to make sure that the growth is there and the rate of the growth is something that keeps the government satisfied. So in my opinion, even if that happens, it's going to take a very long time for the rates to get close to zero. And another thing that I wanted to mention actually is about, if it's okay with you, if you don't want to...
No, I just wanted to point out that you both spoke about China, and even though China's economy has slowed down and it needs more stimulus and all of that, still China is the biggest importer of the oil because of their petrochemical production and industry. So that that takes a lot of the demand. Their demand is still very high because of that business they have, because of that industry.
Right.
Yes.
So
I wanted to exactly mention the role of China. Somehow we can say the role of China is as big and as important as OPEC and OPEC Plus because of the country being a big consumer.
In terms of demand.
In terms of demand, because historically China buys a lot of oil when the price is low, and sells a lot of oil products when the price is high. So we can somehow lay out this scenario for the price of oil to just decrease a lot, but then China...
that correlates with that.
Yeah, exactly. It correlates. And right now, from before the pandemic till now, China has accumulated 500 billion barrels. And the reserves, actually, they have about 130 days of forward demand cover. For a reserve, for strategic reserve, we say 90 days, for example. But for China, they have the reserve for 130 days. And their inventory right now is about, I can't even read the number. It's 1,400, 1,400 then 3 zeros. I cannot read the number, to be honest. So they have a huge inventory right now. But still, because the market thinks that the demand from China is going to be low, they react in a way that the price cannot go up. and it somehow balances out with the production. And I think that's why the role of China is very important. And China has begun doing this since the financial crisis of 2008. So it's not something new. A lot of people know
Began
that.
doing what?
Like buying a lot of oil at the lowest price and selling the products at the highest price.
Right. This actually might be the reason that the technically the chart of WTI shows a very good reaction to $70. You'd bounce right back. Like this is where like countries like China see fit to buy and actually maybe restore or start the production so you can, you know, like give it out once everything is more expensive.
Yeah.
Exactly. The last time oil hit high price was 3 months ago, end of September, because they announced that the strategic reserves of U.S. was very, very low.
Right.
And that causes the price to spike, and everybody said, oil is going, WTI is going to $100, which it didn't happen. It was because of that news, and also the OPEC Plus had the meeting, and they decided to cut production.
Yeah, supply cuts.
But like other times that OPEC has decided to cut production, they've agreed on and you know, with their own rules and their own allocating which country to cut how much. That has really not. A lot of them have not abided by that. They've said that, but they haven't abided by that, and that's why they've had a lot of oil when there was no demand for it. You know, in the ships, in the containers, and all of that. The dangers to the demand of oil is in economic activity, you know, lower GDP and the slowing down of the economies and everything. And dangers to the supply side is what's happening as far as the geopolitical, mainly the Russian-Ukraine war, which is going on, and the world economy has adapted to it. Somehow they've made up with other oil-producing companies or countries, whether it's OPEC plus or OPEC or non-OPEC. Somehow they've done that. The new Middle East war, at first it was some volatility, but now that's kind of cooled down a little bit. But now you have this attacking of the ships in the Red Sea. That should have had a bigger effect, but it's not having it as like it should be. A lot of ships have decided to reroute their shipping from the Red Sea to around Africa, which costs more. The insurance costs more. It'll add to final result. The consumer will make inflation in some things and all of that if it continues to be like that.
Right.
So you know, we'll see the end result of that if this thing prolongs, goes longer.
On your point, actually, the last time there was an accident in a disruption in the delivery of the ships, being it oil or other products or commodities, it was the Evergreen crisis. The canal was closed for 7 days.
Suez Canal.
Yes.
Yeah. When the ship was grounded.
Exactly. Like the ship just simply could not pass, and it turned out to be a human error that that the whole thing happened. But it costed globally 20 billion euros the few days of traffic in that canal. So we cannot just easily overlook the fact that how this is going to change the dynamics of pricing, the commodities that pass there. But it's a good thing that we have another canal right by, and it's actually responsible for most of the bearings of ships. But I think you wanted to continue with your point. I just wanted to mention that this could have a huge impact.
That's a good, it didn't have a lasting impact, but it's still impacted. And that time oil was much higher because of the what was going on. It wasn't at this prices, I believe. I'm not sure exactly what it was, but oil was much more pronounced in 2022 than it was in 2023. The things that are against or danger to the supply side or to the oil companies and oil countries. COP28 just finished in UAE and in Dubai, and they basically agreed that it's the beginning of the end of the fossil fuel era. That was a wording that they gave. Now, by 2030, they're going to try to do it and all of that, but really nobody believes that.
Of course, because that's very far-fetched. In order to develop that type of technology, they need fossil fuels.
Right.
So in order to get there, they have to use a lot of oil. The demand globally must increase.
Right. Plus, they wouldn't, all the people that were at the COP28, some 2,000 of them were oil executives and from countries of these oil-producing countries. So
this beginning of end basically means it's not happening yet.
Yeah,
so
beginning
like
of this, so that can go on forever. This was just to give the world that a lot of people weren't satisfied.
Yes.
Countries that are being impacted by the environment, by these extreme weathers and all of that, they weren't satisfied with that.
Exactly.
The small island countries and even countries like Pakistan and all of that, poorer countries, they're paying the price of these big oil executives. Another thing regarding the oil supply side is the boom in electric vehicles, becoming more and more, taking more of the share of the market, and a lot of people believing in that. It's just the logistics of trying to make the stations for recharging the cars and all of that. So that's going to take a lot away from the as far as the fuel is concerned.
To make it like accessible and usable. But on the previous subject of COP28, I think it actually did two important things, right? That it not achieved many things in terms of ending fossil fuels. But number one, it put the word out there. For 10 days straight, every channel you opened, it was talking about this, and this is, I think, how a ripple effect starts. Like once this is mentioned in between the leaders and all of that, I think it actually has an effect. It starts a kind of a sentiment over the people that this fossil fuel era is over, blah blah blah. The whole thing, I think that is actually not to be like like just overlooked. And the second thing was. I was reading this for one of the papers that I was writing. It was talking about gas, because we don't actually talk about gas much, even when we look at the charts in our live trade and everything. No one is that keen on gas or trading it. But it actually, if you think about it, all of the problems would disappear if we just shifted to gas, because gas is not going to go away, and all of the long-term investings with the COP28 and how it's been giving a negative outlook for oil has been shifted to gas. And they're like gas, what do you call them, where you extract the gas?
Wells? Mines?
It's not mine.
From you mean from the like the big producers like Qatar and all of them?
Yes, exactly. Like Russia, even they're starting a whole new field to just extract the gas.
But that needs a very high quality technology in order to extract gas.
Yeah, but it's not, the point is there is not much fuss about gas. No one's blaming the gas. True that they come from the same place.
It's not as strategic. It doesn't give each country
but
that much
political power.
It
actually does the work. Like liquid gas can actually work for the households. It could work for the industries, for the production. It's actually a very good replacement, and it's not as risky.
It's not as devastating to the environment as it is.
Yeah, so I see huge potential of growth in that area, and if you look at the charts, it's in very historical lows, and you can start seeing a pivot point there. So I suggest we check it later.
Yeah, it's really good, but it needs a complete structural change in the whole world. But I believe one of the main reasons that the U.S. has started producing a lot is because of that uncertainty of the future. How much is this COP28 thing going to impact the outlook? How much the EV cars are going to impact the whole demand outlook? And I've heard that in 2032 actually we will see the peak demand for oil, and that is one of the main or biggest reasons why a lot of companies are merging, like ExxonMobil and Pioneer, and then we have Hess and what was the other
Shell.
Hess? Hess and Shell. Is it? Let me just double check. Chevron, Hess and Chevron, and then we have Crown Rock and Oxy. All of these big players merged with the smaller ones, and all of them are trying to create a lot of production just because of the uncertain outlook, and that is causing a lot of problem for countries like Saudi Arabia and for Russia, because we see how prominent they have become in the oil market. And something interesting that I've seen that Saudi Arabia usually does when the production of countries like Russia, and right now they're best pals, but Russia or the US, when the productions goes up, Saudi Arabia has done it twice, and this country does something very interesting. Last time it was in 2015. The production of the US was increasing, as well as Russia, and Saudi Arabia's market share, the share in the market as the demand, it was decreasing. So what Saudi did, that it was this country flooded the market with its oil, record high production.
Try to shut down the shale market.
Exactly. And what it did was that the price of oil, because of the supply and demand, it became very imbalanced. The price of oil, it just went below $30 per barrel. And that what it did was that a lot of these oil production companies, they went bankrupt. And then the market started working back again. Then Saudi did it again in 2020. And when the amount of production of the US and Russia
specifically,
went up again. So again, this country flooded the market. This time the price of oil went below 20. But what it does, again, if the amount of production from the US just continues being this much, people think that Saudi will do it again. So right now they're giving Russia a little bit of time, and they're giving China a little bit of time. So they say from up till spring, these type of supply cuts may continue from Saudi. And if Saudi Arabia sees that, again, the US is having the biggest share of, for example, the oil market,
they might do that same thing again.
Yeah, and then the oil prices might be below $30 or $20 per barrel.
It's good that it's funny that you mentioned Saudi Arabia, because right now there's trouble in OPEC or OPEC plus. Angola is leaving the OPEC by January 2024, and even though they don't have a big share of the oil production, it's significant because they see it. Everybody else, Bloomberg was reporting that they see a rift even between UAE and Saudi Arabia, because they're saying only one country is dictating everything, meaning Saudi Arabia, the rules of OPEC.
They wouldn't be wrong, though.
No, they're not wrong. They even this is from IEA says that too. But the point is here that Angola leaving because they say that, they want to control their own destiny as far as producing the oil and pumping how much they want into the markets and all of that. Other countries, the big players, UAE right now, I think pumping over 4 million barrels a day. And they're going to come and they're going to want their share and all that. So there might be a rift between UAE and Saudi Arabia. And according to IEA, OPEC 10 produced, this is for the month of November, produced 22.97 million barrels a day. The OPEC 10, meaning the OPEC countries minus the three countries, Iran, Libya, and Venezuela, because they were exempt from the cuts. They had the capacity sustainable capacity to pump 27.94 million, these 10 OPEC 10 countries. So with Iran and Libya and Venezuela being exempt from that, the total OPEC output was 28.1 million barrels a day for the end of month of November. and they could have pumped 33.76 million barrels a day sustainably.
Right.
And then you have the you have the OPEC plus, the non-OPEC, which they make up the OPEC plus. They pumped another 14.91 million barrels a day, and they could have pumped 15.58 million barrels a day sustainably. So that share of the market they have, almost 40% or somewhere in that area. So the total OPEC plus output was 43 million barrels a day, and they could have done almost 50 million barrels a day sustainably. So this is a scenario that whether that's going to continue or not with the oil demand and supply being even with the cuts that they agreed upon, and it's still supply. There's going to be some kind of a glut in the oil market if the demand does not pick up. If the demand picks up slowly, it may sometimes that will take care of the supply. But if it doesn't, then you're going to have oil glut, and also maybe with the rate cuts and everything, that might ease things down. But there's a problem that's occurring within the OPEC plus, within the OPEC itself.
It sure is, and it's becoming visible to the other countries. As you said, Angola leaving OPEC was not a problem on its own, because their market cap, the share of the market was 1.1 million barrels a day. And actually the reason that this whole story happened, it was because, as you mentioned, they wanted more production, but their market cap is 1.2 billion. So it doesn't make sense to be scared of 100,000 barrels a day more, because that would not make a difference. Saudi Arabia by itself, the capacity of production right now for Saudi Arabia is 9 million barrels a day, and they have 4 million excess barrels that they can release.
They can pump up to over 12 million.
So they would do the flooding scenario that you were speaking of. But it's very unlikely for the markets to price in this, because this is a very devastating move for Saudi Arabia. And I do not think OPEC is in a place right now to be able to handle this kind of negativity. As you mentioned, Angola leaving put a question mark on the power that UAE has over OPEC, and this is what it actually is scary about the demand part. But coming back to the point of the monetary policy, what happens? What happened to all these businesses that wanted to grow, that wanted to expand their businesses, or they wanted to all of this the small business that wanted to get big? They stopped because they could not borrow more money. They could not, they knew that it's a hostile environment for their businesses to grow. So they're waiting, right? They're waiting until the rates go down. And what happens when the rates go down? Things become easier. Developing a business becomes easier. Taking money from the bank, loans will become cheaper. And as that happens, that means growth. That means production. That means
it might take
buying.
a little time, but it will
Exactly.
It will help. It will boost.
We were mentioning the 0.1% rates, then you said it's not going to happen in the coming year. The closer that we get to the rates of zero or something close to that, the more the stimuluses are going to happen to the businesses. And I think we will start seeing some effects of it by the end of 2024. Maybe for 2025, we will see the full effects once the cuts are done. But the other factor that could move oil is the sentiment. And once the ship of sentiments has started running, it's really hard to turn it back. And that's why I think right now the speed of rate cuts is something very, very important for the prices. And what's being priced in the market right now is way ahead of what Fed is actually doing. Somehow it turned so quickly. People did not expect this much cuts. And once the Fed started talking about it, they went way ahead of themselves and started cutting like pricing in 4 or 5 steps. But now we know that maybe we'll have 3 steps down. But I think if we see any developments on the term of sentiment for cutting rates, that will eventually start rising prices of oil.
Yeah, I personally believe in the first 2 quarters of 2024, we will see the prices of oil, both Brent and WTI, lower. And in the second half of the year, we might see the prices of oil much higher, because as the rates are actually being done, cutting rates are actually being done, then in that case, we could see more demand. We could see better sentiment as soon as, for example, the market sees the first rate cut. Then they're going to go and start buying more oil, and the same thing might happen to the stocks as well. But something interesting that I have heard recently is that we cannot expect the price of oil to increase a lot in the beginning of the year, and a lot of market analysts and a lot of the economists believe that at the beginning of the year, at least, we could see the price of oil in the range of 65 to 70. And because still the surplus in the market is gonna overpower the geopolitical tensions and also this game of power play in the market. But something else that I personally think that a lot of institutes that print forecasts do not take into consideration is the amount of supply that is coming from the countries that you mentioned. They call it the 5 fragile countries: Iran, Iraq, Libya, Nigeria, and Venezuela. They are trying to increase their production, and the US sees that, and the US is putting sanctions on Venezuela. I've heard that they're trying to lift the sanctions on Venezuelan oil, but for Iran, because the political role that Iran has, they're trying to somehow imply the more sanctions or harder sanctions. They are trying to somehow develop a law called SHIP, which is Stop Harboring Iranian Petroleum law. Petroleum, sorry. Law. And the House of Representatives are trying to somehow make this into a law, this act, and they are trying to somehow stop Iran from exporting more oil, and they're trying to somehow target the harbors and the places that actually let Iranian oil to move. And they are doing this so that China and Iran would have somehow their relationship, now that because of BRICS and
disconnect them,
yeah, to make them more disconnected, so that the political role of Iran will get somehow detached from its oil. So these type of somehow political roles, these types of we call them like the countries that are the underdogs in this big play of power. We have to take into consideration how much they can produce and how much they're allowed to supply to the market.
So a lot of that, what you said, has to do with the internal politics, the elections of the U.S. They're doing everything in their power to keep oil prices down, economy growing, people not having as hard of a time in the States as they did before, because voting becomes, all the scenario is going to change right after the election is over. Next November, beginning of November, the U.S. election will be over as much as the other elections that are earlier on in the year. So a lot of this is being done as far as keeping the oil prices down in the U.S. With the WTI and all of that, has a lot to do with the strategy of the political strategists for the elections. Right. So, this thing, as far as the Iranian trying to put sanctions and all of that, that's coming up with House of Representatives or whichever committees that coming up with that. How successful will that be? As long as they put it out there and for people to see it and people to say, hey, they're doing something about this and that. How realistic it is, it's not, they've been going around the sanctions for so long, that's not going to be a really a sticking point.
Right, because we saw what happened with Russia, like with the amount of production.
With the oil cap, oil price cap they put and everything.
It matches the previous levels before the sanctions. But something that is really, it's a big question in my mind is, I know that OPEC is being silent and is just observing, but I really do not think the outlook for demand within the OPEC leaders is that negative. Also, the same with the US, because all these countries that are trying to produce more oil, they know the higher the production, the less the price. And if they want to control, like if a country like Saudi wants to stop the prices from falling, they would give out cuts, right? But that makes their market cap share less. And that is not something that you want. And as you guys mentioned, right now, like the African countries are trying to produce more to get that money to start the developing plans. Russia needs it badly, so no one's backing off from what could actually be theirs. You see Angola rebelling on over 1,000 barrels per day. So this is not something that you would do if you were really worried about the demand. And as I mentioned before, I think the underlying trend for the oil market is bullish. And right now, because we are seeing sluggish demand, is something that is clouding the views of this uptrend that is happening in the market. Because why would the US start producing more? Why wouldn't the OPEC countries cut more that like be actually the things that they mentioned they're gonna do? Why wouldn't they do it? I do not think the outlook for demand is that weak. What do you think about that?
Let me just say like a target for the price. So if we just see the forecast and let's see what you think about the target of the price and how it matches the outlook that you have for the demand. Because a lot of big banks, for example, like Goldman Sachs, thinks that by June 2024, the price of oil will hit like $85 a barrel. So it means that Goldman Sachs thinks that at the beginning of the year, as I've mentioned, and as I think both of you agree, we will have some bearish trends on the price of oil.
Right. Also seasonally, it's like
seasonally, exactly.
Lower demand for the oil.
Yeah, but by the middle of the year and as we go into Q3, I think the price of oil will be increasing. How does that match your view of the demand and also the technical that the chart is telling you?
You mentioned Goldman Sachs, forecasting for the month of June, middle of the year. I've heard forecasts as high as 94. Different, other, not banks, but other energy companies. I've heard that, and it's not. You can't say they're wrong because they're seeing, growth might pick up, and maybe geopolitical tensions will ease, and countries become more actively involved in trades with each other, and the situation in Europe gets better because a lot of the cuts that are happening, a lot of the slowness in the market is because of Europe.
Yes.
Europe is really in a kind of like a deflationary state, even though their inflation is high. But as far as the energy and oil is concerned, they absorbed a lot of it.
Recession. Their manufacturing sector is.
So I've heard that I've read that oil could go as high as $94. And you mentioned the prices. If WTI needs to close above $74 for it to be to go to the next level, which is 80, and then after that 84. These are the technical levels of WTI. On the downside is 67 something, 67.43 is another support for it to to bounce from there and all of that. But yesterday it closed at 73.49, so that's still under. It's close to 74. Yes. It was 74 before it was a floor. Now it's the little bit of resistance, so it might pass that and close above that, and not just one day, a few days. And then from there, the next target is 80 and then 84. Looking at it technically, and if that happens, that means you're looking at Brent. If WTI hits 84, Brent will hit 90. Or 94. So that's in the same ballpark as far as the forecasts are concerned. And it is viable with the central banks trying to cut rates to boost the economy, and they're convinced that inflation is over, but not completely down, because back when the interest rates were near zero, because of the pandemic and all of that, inflation was very, very low. That's why they were cutting, because to boost the economy and all of that. But now inflation has come down. It's not the 9% it was in the States, and even more so in the Europe and all of that. But it's come down, but still above their central bank
level.
targets that they, for the U.S. is 2%, and for European countries maybe a little more, but the ECB and all of that in the same vicinity, I think between 2 and 3%. So when that happens, they'll it'll boost the demand for oil, and make the growth even more growth-minded
Visible.
economies. Yeah. So it reads with that. If that does happen, then these prices are not out of touch. Unless something unpredictable happens that'll spike up the price way high.
Exactly.
Or something else happens that might even go lower. If we're looking at something, much more recession, or they could talk about soft landing, and they change that scenario if things happen, if stock market crashes and all of that, which they don't foresee that now. But it could happen and may change the scenario and all of that. But that number is not
very far.
It's not far-fetched at all.
But what I saw from that's what baffling, because you see all these different institutes and banks just saying different numbers for their forecasts. For example, Fitch and the World Bank see a scenario where the price of oil in 2024 could even hit $120 per barrel. And they say that in that case, because of supply restrictions, because World Bank and Fitch think that the supply restrictions will be somehow much more heightened in 2024. And they think that the regional conflicts will somehow be much more in the coming year. They think the price of $120 per barrel is something that we could see, and they say these things can boost inflation and also dampen growth. So in that case, that creates a very difficult situation for a lot of countries that are trying to somehow boost production, and countries that are trying to be more active, like OPEC, Russia, and a lot of these countries that are oil producers. And in my opinion, something like this, about like 120 a barrel, is a bit out of touch, out of reach. But if that happens, it's going to create a lot of problems for a lot of countries. What do you think about this situation? Do you see a scenario where the price increases that high?
I mean, 120. It's we're talking about this at a time that the price of oil is 73. So it's of course under very weird circumstances that would be something that we could talk about, but I do not think it would reach that high unless something serious happens. But I actually see a perfect combination for rising prices after the first quarter of 2024, because on the monetary side we can see this boost, and this quantitative easings would actually contribute to higher inflation, and it will raise the prices higher, plus the demand. And like the geopolitics that we are dealing with right now, I don't think this is something to go away, because it's connected to the geopolitical tensions that is happening in the Middle East. Because the reason this Red Sea story started, it is because the Houthis are supporting what's happening, like what Israel is doing to the Gaza Strip. And
that's the excuse. That's what they're using as the excuse to.
Yeah, they say they're targeting the countries that are just supporting Israel. They're targeting their ships.
Do you think this is not what's really happening?
No, I'm saying that's the excuse they're using for doing what they're doing.
I think this is why they're doing it, isn't it?
But it underlying, it could be doing it to try to boost up the oil price.
You mean one of the producers of oil who's not happy with the situation?
With the prices. But $120 a barrel is not something that's, 10 years ago maybe it was, but oil went and hit 147 or something 10, 15 years ago. I can't remember the date of it, but I remember very, very perfectly when it went that high. And just recently, in the last few years,
Yeah.
In September it hit 94, although it was short-lived, and it came down from there. And before that, it went to 100 some dollars,
Yes,
110,
last year
11.
it did.
In October, we were talking about $100 per barrel.
Right,
oil,
beginning
right?
of October, because end of September,
Yes.
it almost hit that because of that report that U.S. Strategic oil reserves are almost zero, or
They
some
say
report
there
came
are
out.
like 16 days left.
Yeah, something like that came, and all of a sudden it spiked up, and at the same time OPEC Plus was meeting to agree to a cut. It had nothing to do with the OPEC Plus, because they didn't agree on much cutting,
Even if they did, there's no reassurance that it's gonna happen.
yeah,
Just like it's happening right now.
and they come out with the statement, but they don't abide by it. But $120 is not a far-fetched price. And right now, as we look at it, it may be, but in 2024, a lot of factors are at play, and politically, geopolitically, and economic activities. So, I think in order to wrap this up, I have from the IEA report, oil market report, which is, they call it IEA OMR, oil market report. This is basically for this year, because this report was done in December. So they'll come up with a new report in January for the month of December, and also for the year. And this is their outlook. It says world oil demand is on track to rise 2.3 million barrels a day to 101.7 million barrels a day in 2023. Global fourth quarter 2023 demand growth has been revised down by almost 400,000 barrels a day, with Europe making up more than half the decline. The slowdown is set to continue in 2024, with global gains halving to 1.1. So they were looking at 2.3, now they're looking at 1.1 as far as the gains are concerned. Million barrels a day. As GDP growth stays below trend in major economies, efficiency improvements and a booming electric vehicle fleet also drag on demand. So these are all the factors that being put out by IEA is saying about the oil demand, and looking at it in this report that was done in December. And of course, they take in so many factors and looking at so many things, reports, and so many tools they have at their disposal that we don't have, as far as saying, but this is what they're looking at. But the outlook after that, economic growth, less political tensions, and central banks cutting rates, and countries who are looking at recessions now, somehow coming out of the recession, whether it's short-lived, shallow recession, or more prolonged-lived. This will be all played out in 2024, as well as the elections and the internal political of the countries. So
Exactly.
You wrapped it up beautifully. Thank you.
Thank you very much. So I think I have also covered everything that I wanted to say.
Everything. I just really want to say how good it is that we have these sessions, because right now I'm like super excited for 2024 to see each of these factors and how they're gonna affect the market. So thank you very much for being here.
Thank you, and happy holidays to
Happy
everyone.
holidays to you. And next time we sit here, I think we will talk about the stocks market, right?
Let's see if they crash by that time.
Okay, good.